We've moved over. As you can see in the top right, we've got 49 of our attendees already joined the session. And I hand over to you, Jaco, to host this very exciting session with our speakers.
Yeah, thank you, Wendy. We've got 20 minutes if I have it right, and it is an absolute pleasure to invite Peter and Russell to share their experience on this digitalization journey that we're on, and it's specifically for me. I'm extremely excited to hear their journey, and I think in terms of where we are with COVID, it's probably kicked us 5 years ahead. So I would just like to have Peter introduce himself, and then as soon as he's done, then I will ask Russell to introduce himself, and I'll try and keep you guys timeous, so without interfering too much. So it's all over to you, Peter. Thank you very much.
All right. Thank you so much, Jaco. I'm Peter Njonjo. I'm CEO and co-founder of Trigger Foods, based out here in Nairobi, Kenya. And basically, throughout my career, I worked with Coca-Cola for 21 years across Africa. And last year, I took on running the company that I co-founded as CEO. And what we do as Trigger is that we're solving the problem around the poor supply chain structure of informal retail. So what we're doing is we're leveraging technology to aggregate informal retail across the urban cities that we operate. In the last 6 years, we've grown to about 1,000 employees, and we service about 7,000 retailers a day, and we have about 4,000 supply partners, and married with 4 kids. So Jaco, whether I give that brief overview, and then from there I could then talk about the company.
You can. That'll be good. We would love to hear your journey.
Okay, fantastic. So what does the Trigger do? So first thing is that I think it's easier to push through the problem that we're trying to solve. So what we find is that in countries like Kenya, consumers are spending about 55% of their disposable income on food. Just to give you context, that's what consumers were spending in the US 150 years ago in the 1870s. So today, if you look at most Western markets, consumers spend just about 10% on food. So again, it shows you the inefficiency in the food ecosystem that we have in Sub Saharan Africa. And as close as South Africa, spending about 16% of disposable income on food. So why is it that Sub-Saharan Africa then tends to be just so inefficient? And this stems from one problem, and that's around the informality of retail. 90% of food in Kenya and most of Sub-Saharan Africa is actually retailed through informal street vendors. And when you look at markets like Western Europe, there's maybe about 10 big retailers that control about 60% or 70% of retail. If you look at South Africa, there's a few retailers, maybe about 10, that control about 60% of retail. When you have that level of aggregation, it lends itself naturally to very efficient logistics from different players. For example, in South Africa, one company controls 20% of the tomato market. So, but you don't have that in Kenya, or you don't have that in the rest of Sub-Saharan Africa. So what we're trying to do as Trigger is that by aggregating all this informal retail, we're then able to then build better efficient supply chains. Just to give you context, now we're starting to see more large-scale farmers emerging in markets like Kenya that are 3 to 4 times more productive. And that's really starting to help us. There's quite a bit of interference. I don't know what the source is. So that's essentially been our focus around the aggregation of retail. And throughout this COVID period, we've seen our model continue to be resilient even in this trying environment. Because for now, we're seeing that the COVID-19 pandemic will actually impact disposable income significantly. And as disposable incomes get impacted, then efficiency will then continue becoming very, very critical and important in terms of lowering the price of food. And that's essentially what we focused on. And I must say that during this period of COVID, we've continued to grow. We're seeing retailers starting to align more towards our way of working, which is around technology. And just to give you some context, between April and now, if we look at the active number of customers that we serve in a month, we've essentially grown by about 60% during that period, which I think for us has been very, very encouraging. So that's basically a nutshell in terms of who we are as Twiga, what it is that we're trying to do, the problem that we're trying to solve. And I will leave a lot more for Q&A, which I think provides for more engaging session about the opportunities that we're trying to address in the country.
Thank you, Peter. And yeah, I think if you could ask anybody 8% growth, I think you will you will have a few body parts being given. I think it's phenomenal, and the ability to aggregate over such a wide expanse is phenomenal, and it's going to be interesting to see long term what effect that's going to be on bricks and mortar. But I think you're right, we're going certainly to get some interesting questions at the question and answer session. And then without further ado, Peter, Russell, it's over to you, and to a different part, to livestock. It's going to be interesting to hear you out. Thank you very much.
Thanks, Jaco. Thanks, Peter. So a bit of personal background. First of all, I apologize for just jumping up and absconding. It was because there were complaints of the sound quality, but I think it's better. There was some background noise, but I'm not going AWOL on the session. So personal background, I'm a technology attorney. I'm also on a television program that no one watches on channel ENCA. My mom doesn't watch it, but if you ever tune in, it is in like 47 odd African countries. And I'm also the founder of a company called SwiftV, which is a livestock trading company and an artificial intelligence company. As personal background, you know, there are three things that interest me as a technology attorney. That's artificial intelligence, food, and space. So I believe artificial intelligence will take every job, but no matter, you know, as populations rise, we're going to need smarter ways to make food. And also we're going to have to use space more efficiently, which is very much to Peter's point. And he hit the nail on the head when he spoke about, you know, South Africa and other more, I'd say, mature economies, that there's one or two massive retailers who kind of supply all these kinds of agri services and agri products. So in South Africa, because farming is a game of economies of scale, as Peter correctly said. So what we do is, I'm the founder of, so livestock, okay, so problem statement. Before we came along, livestock was traded very situationally. The thing with livestock is I'm not buying a car or a house where it's a bricks and mortar situation. I want to buy an animal, and the quality of the animal is dependent on a certain day. So I can't see a picture of an animal and say, this is the cow that I'm going to buy. So if I'm a farmer or a buyer, I want to see the animal in real time, the exact quality of it, etc. And connectivity in South Africa is very poor. Overseas in Australia and America, online livestock trading with the real webcast connectivity is massive. I think in Australia, 70% of all livestock is actually sold through this method. But in South Africa, it hasn't been done before because of our high latencies and poor connectivity. So what we did was we basically managed to figure out, with the help of Google, I actually met Peter many years ago when I was on a Google program called Google Launchpad. We went to Twiga when Twiga were these big fish, big company in Kenya. And so it's wonderful to be in a panel next to him. Now we're doing quite nicely. We're also a multi-million-dollar company, so it's great to be in his esteem. Yeah, so we managed to figure out how to do a low latency, real-time livestock auction platform. Through that, we get a whole bunch of data, which we use via artificial intelligence to make AI products, which we will do things like credit score, retailers, people who are applying for bank credits, and then also to match buyers and sellers at optimal times. So I'm quite proud to brag and say that we actually broke 2 South African records in the same week for livestock prices. I think the one's a world record. We sold a boar and bull for 1.7 million rands online. We also sold I think it was a Simbra bull for, I think, also like over 500,000 rand online. So, you know, it shows that our artificial intelligence works. And also we sees from places like Australia, France, etc. So I think we're connecting the markets. We bring people from overseas into the markets. We're using artificial intelligence to try and boost prices and manage food efficiency. Yeah.
Thank you, Russell. It's phenomenal, and I think also, you know, I think we're probably going to get there. There's a few questions for Peter, but just to comment on what I've heard from you is that these connection of markets is not only locally, but it seems to be able to expand across borders internationally, and that the good use of artificial intelligence is actually seen as an enabler in terms of growing your market. So I think we've got a few questions, and then maybe the guys can close. Peter, the questions are for you, and it's comment on how small scale farmers can penetrate the formal retail market. That's from Sydney, and from also there's some questions in terms of COVID-19 supply chain challenges. And then the last one, Peter, is how do you tend to transfer the knowledge from trigger to small scale farmers on post harvest losses? So I hope I'm assuming you can also see the questions on your chat, so you've got some response time.
Thank you so much, Jaco. I think I can see all the questions. So the first thing was around what challenges we're facing around the logistics with the onset of COVID and how we're resolving them. The fortunate thing is that in Kenya, we've not gone to full lockdown, similar to what you had in South Africa. So what we had was around restricted movement. So I think, Russell, there's a bit of interference from your side. Maybe you could mute.
I apologize, guys. I have no idea what.
No worries. So I think so. The key thing here is the government restricted movement in and out of the city, and then there was a nighttime curfew, which allowed companies to continue operating pretty much during the day. And what we've done is that we're classified as an essential services provider. So what that allowed us to do is to get special licensing that allowed us to operate outside of the restricted movement areas during this period. But what was very, very critical was the focus around the safety of our employees. Because at the end of the day, if people don't feel safe to go out there and work, then it doesn't augur well, even if you have the license. So that's what really, really helped us in terms of getting our employees in the right frame of mind, addressing concerns that they have around their well-being, health, safety out there when they're out with consumers. And I must say that right now, without fail, every day at night, we move about 450,000 kilograms of assorted product out to our customers every day. And that has happened very, very efficiently even during COVID. And because we're dealing with the small retailers, getting this product to them then becomes very, very important in terms of also their livelihoods, because it means that their supply chains are not disrupted, even as many companies are undergoing a lot of disruption during this period. The second question was around small-scale farmers and how we help them penetrate formal retail. Formal retail actually is very, very small in Kenya, only accounts for about 10% of food retail and about 30% of general retail. So again, predominantly bulk of retail is informal. So the key thing here is Nairobi is a city, maybe give and take, of about 6 million people, serviced by about 180,000 retailers. So when you look at that level of fragmentation, the big challenge for most farmers has been structured access to the domestic market. And that's what essentially we're solving to some of these smallholder retailers, which is essentially around aggregating all this and becoming a concentrated point where you can then supply a product. And that augurs very, very well in terms of giving farmers more predictable market. Now, one of the things that we realize in the country is that we do not have a lot of commercial farming, because 70% of the market has been informal because of the informality of the retail market. And what you find is that most structured farms are the exporters, where you find a lot of sophistication in agriculture, similar to what you have in markets like South Africa for domestic farming. So, and because of this aggregation, we're starting to then drive a lot more farming that is commercially oriented with irrigation, larger farms, quality inputs, and all. And by providing that structured access, we're starting to see more investment going into the domestic farming market. So then the third piece was around building sustainability and traceability with such with a high number of farmers. So one of the things that we've done is that we've started working with one of our investment partners, which is IFC. And we've built this traceability program where we're actually certifying all our farmers onto Global Gap, which means that you will actually have better practices in terms of how people are undertaking farming, and also the right level of traceability. But also we're investing a lot in technology. We're actually now going to have our whole crate float having RFID trackers, which means that now we'll actually have real-time tracking of inventory across the whole supply chain, all the way from farm to retail. And the last piece was around management of post-harvest losses. And one thing that we're doing is that now we don't put a burden on farmers in terms of post-harvest losses, because we're actually involved in the harvesting process. So we're managing the whole post-harvest loss, the whole post-harvest management of produce. And just to give you context, with very little refrigeration, actually with no refrigeration at all, we've cut down the market post-harvest loss by about 70% within the Twiga ecosystem compared to what's happening out there in the market. And by building that level of efficiency, that's why we're actually able to offer farmers better pricing and actually build a more sustainable business in that respect. So net, that's maybe that's, I hope that answers some of the questions that have been asked. So thank you so much, Jaco. Let me go and mute here.
Thank you. Yeah, thank you very much, Peter. I think it's brilliant. And when you think in terms of this whole ecosystem, what Twiga's ability is to bring such a vast number of people together and moving such a large volume of product. And it's like, and to have some form of fresh produce perspective, you know, what we don't eat or what we don't sell today, tomorrow potentially we throw away. So it's a high intensity business. So it's phenomenal what you've gotten right. In terms of Russell, there's a question for you, but I would like to add on to it in terms of what SwiftV has been able to do, specifically when, you know, I'm not even talking about COVID-19 lockdowns, but when you've got lockdowns in terms of like foot and mouth disease, etc., what SwiftV's ability is to overcome those challenges. And then the question that Ahana has asked you is, what do you envision the data being generated or being used for, and are you seeing livestock farmers farming more sensibly? I'm going to hand it over to you. Thanks, Russell. Your mute's on.
Sorry, guys. I hope there's not much interference. Don't know what it is. Thanks, Jaco. Thanks, Ahana. So I think in terms of just general distribution channels, so 100% South Africa suffered from first drought, then foot and mouth disease, and now COVID. And what we've managed to do is we must have at some point been distributor for maybe 60 or 70% of all livestock in South Africa. So what we're able to do is, you know, if you're a farmer, prior to us, if you were based in, say, the Western Cape, and there were people who wanted to buy livestock from you in the Eastern Cape, whatever the case is, they just wouldn't travel down and wouldn't have access to see the quality of the animal and therefore purchase it. So what we've done is we've created a real-time network where someone can basically go, like, you know, flip up their laptop and have 10 different auctions all in one space and actually, you know, buy premium quality animals. We've got 3 auctions happening today. On that, and in terms of the retailers, we've now kind of partnered with Subtropico Limited, who are the largest kind of producers of livestock sales and also of fruit and veg, and we're their primary online distributor. So in terms of that, we can connect the market. We've done that really well. I think we sold, stand correct, about R500 million worth of livestock online. So we are moving product well. So that's in terms of general distribution. And then to answer Ahana's question, so in South Africa, the market is quite efficient. It's split up into, so livestock trading is a 200 billion rand industry consisting of 40 billion rands worth of trade, 30 billion rands worth of retail, 130 billion rands worth of financial services. So to answer your question, because it's a very much a commercially efficient livestock trading business, the data is not used so much to make farmers farm better. It's more to help the banks and insurers insure farmers more sensibly, and also to provide credit on better terms. A big thing for your emerging farmers. There's about 25,000 commercial farmers, 200,000 small scale, and about 1 million to 2 million emerging farmers. The data is used to bring the emerging farmers into the economy in terms of credit scoring them, to give them access to finance, but then on your higher level to more kind of like lend more sensibly and insure more sensibly. That's how we use the data, and that's how we distribute. That's how we provide this distribution channel to answer back to Jaco's point.
Thank you, Russell. Wendy, you just need to guide me here in terms of time available. But a question that I want to ask Russell, in terms of the Swift-V, how did you find you compressed costs in terms of having the platform versus traditional transaction costs that's out there?
Sure. So firstly, we work alongside auctioneers. So the way that the industry splits up into, you've got a buyer and a seller. Now, because there are problems inherent with livestock, foot and mouth disease, etc., the agent acts as the go-between between the two parties. So we normally broker a trade via a physical auction. And what we do is we work with the agent who, while the physical auction is happening, we have an online auction taking place. So the costs are negligible. Generally charge a flat fee, and in addition, what we're able to do is, instead of some buying in for a livestock auction and spending all the logistics costs, often they only have 1 or 2 lots they want to purchase. We manage to bring down all the logistics costs, all the travel costs, and enable by more buyers to look at a particular auction and buy. We can also help agents reduce their commissions because they're making good margins, just the amount of volume that's happening in livestock auctions across the country.
Thanks, Russell. Wendy,
you're welcome. Yeah, you're welcome to take another 1 or 2 quick questions, and then we'll move on to the networking. It's fine.
Okay, there's one for Russell in terms of what's the split between SA versus international sales/auctions.
Sure. So we focus on South African auctions. So in other words, our livestock is sold in South Africa and offered to the world. We are starting to open up into Zambia, Namibia, Botswana, and Zimbabwe, I think, at some point as well. In terms of buyers, we've had buyers, I would say, your higher end animals. So your volume is being purchased in South Africa, lots of different animals, but your more prestigious animals are being purchased from overseas people, America, France. I'd be lying to you if I know offhand. Maybe 50 million rands worth of livestock is purchased by people outside the country, whereas maybe the 450 million, R500 million rands worth or whatever is domestically within South Africa. But I could be lying. I'd have to check up with it.
Thank you very much, Russell. And Tim, thanks for the question. Peter, there's another one coming through to you. It's how do you ensure balance between giving farmers best farm price while ensuring customers get best value for money? I'm glad I'm not answering that one.
Oh, very interesting question. So the thing is that, as I mentioned, most of production in Sub-Saharan Africa is informal. You think about smallholder farmers who are not as productive. So what happens is when we start moving to commercial farmers, what you find is that at times you're getting a 3 to 4x differential in productivity. Let me give you an example. Rice production in Kenya, per acre, farmers are generating about 273 kilograms of rice per acre. In the US, that yield is 4 tons an acre, 4,000 kilos. That's close to a 15x differential. So, okay. So that's close to a 15x differential in terms of productivity. So it's possible to improve the yields of farmers, give the farmers a significant increase in profitability land that they're farming, while at the same time significantly reducing the price of food for the consumer. So what we want to do is change the game as far as the value chain dynamics are concerned by focusing on productivity. So that's what our main focus is. If we drive productivity and we drive efficiency in logistics, we can generate value from that and lower the price of food in the market.
Thank you very much, Peter. I think, in terms of where we are with price discovery in terms of South Africa, it's sort of on point. The market price is the market price. And I think in the end, it drives back that mention of efficiencies on farm to be able to generate food at applicable pricing structures. So it's good, and whatever the market's at that point in time, it will absorb whatever can be offered, or you're gonna have products standing over. Wendy, I think we've done really well here, and I want to thank Peter and Russell. It's been phenomenal, and just for my own benefit, I'm certainly going to catch up with the two of them in a very short space of time. So thank you very much for the opportunity, and I'm handing over the rest of the session to you. And thanks once again, Peter and Russell.